The government shutdown is looming. Could it crash crypto? Today we're going to break it down for you. My name is Paul Barrow. Welcome back into Tech Path. I do want to thank our sponsor today, and that is Coinbase. A great place for you guys to get started. And you can earn up to 4.5% over on your USDC. So your stable coin, park it into you over to Coinbase, and you guys can earn some juice right there. And of course, one thing you can do, of course, is trade like crazy within Coinbase. A lot of tokens available. Check out our link down below. It's going to give you up to $200 in crypto to get started. Check it out. All right, let's go over to a few points here. I want to kind of lead off with the Kobe letter here. Breaking: President Trump says he'll place a 200% tariff. This happened this morning on all wines, champagnes, and alcoholic products coming from the EU if they do not cancel their 50% tariff on U.S. whiskey. I think he's really just vying here for a reciprocal tariff. Maybe they drop a little. Maybe Trump only comes up to 20. Maybe they drop down to, or maybe they just reciprocate and go 50-50 each side and everybody wins and everybody's happy. We'll see if this is going to be a continuation, because the problem that we're seeing in the markets right now is every time Trump does this, it hits the markets. It's almost immediate, and the pain, though it may be short, I think everybody now is trading tariffs. And once Trump does this, we get a tariff move, and yep, that's what happens. Yesterday, of course, we saw that steel and aluminum, Canada could rise to 50%. Canada and Mexico, 25%. Some Mexico tariff paused until April 2nd, which is when he's going to launch all the reciprocal tariffs. China, extra 20% on top of the 10. So they're getting railed. And then, I shouldn't say railed, they're getting the tariffs they charge us. And then Europe, the potential 200% on alcohol. That's what's happening right now. And of course, the market is definitely responding to it as we see Bitcoin around 80K. I want to go to a clip real quick. This will get a little bit more into the detail of what they're thinking. Take a look.
One or two items with one trading block, I'm not sure why that's a big deal for the markets.
I think that the big deal for the market is just the not knowing what's next and what the target is necessarily going to be, and also not knowing where this stops. Because if we ratchet up tariffs, they retaliate, we go higher, then what?
Well, look, sir, it could go the other way too. Look, that's the nature of these reciprocal tariffs. That all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Yeah, that was one of my questions, which is how these tariffs come off, if that is ultimately the goal, because it feels like once they go on, it just gets out of control from there.
Well, again, that's a decision by our trading partners if they want to ratchet things up. And I could tell you, as somebody who's studied the history of this, it is the surplus country that takes the greatest hit. We have a big trade deficit with these countries. So in the event that there's a back and forth with tariffs, I would counsel these government leaders that they are on the losing side of this argument economically.
Yeah, okay, so there's a lot there. I think the key here, first of all, is, Trump is playing the strong arm card here in Art of the Deal. It is a technical process of negotiation that he's going at. Now, whether or not this rolls out into equal tariffs, reciprocal tariffs across a lot of these countries, first of all, if that were to happen, it would be amazing for all American manufacturers if we actually got reciprocal tariffs in most of our goods. I can imagine the bourbon industry and the whiskey industry would absolutely go crazy if Kentucky were able to do that. Now, the other side of it, like the reporter said, is what happens if they go higher? And Bessent, of course, responded is that the country who does have the excess side of it is typically the one that loses. And that's the problem right now, because they don't have as many cards at the table. I think he's going to hold it, and he's going to win on a lot of these negotiations. It's already shown that it has happened. With that being the case, it is hitting the dollar. Many are right now sleeping on the DXY. This is a dump that's been happening, we've been talking about for quite some time. There's a few things that are in there, because this is where it changes a little bit. When the dollar is strong, capital flows into the U.S., draining liquidity from everywhere else, right? Okay. But now we're seeing the opposite because Germany is going full send on their infrastructure fund. Basically, this is Germany now printing. The EU is likely to go ahead and start printing as well. There's going to get liquidity into these. The question is which has the stronger economy to support that liquidity? Now, it could flow into the economies themselves, or that liquidity will, by default, go into the strongest economy that has the most liquid consumers in the world. There's only one, and that's the United States. So I think that's a little different in terms of how the QE is going to play out in Europe. The market isn't fully pricing this in, but in his opinion, this does expect risk assets, including crypto, to go up. And I think that will be the case, which has mostly been the scenario. Right now, I think it's thwarted because of what we're seeing coming out of the White House, which has mostly been affecting the markets due through the use of tariffs. Egg prices, though, now have hit a 3-month low. So we are seeing some adjustments here. Interestingly enough, could the slowing of the CPI, because Trump is now claiming that's his first CPI print, that everything before that was coming in from the Biden administration, are we seeing a slowing of the consumer price index and inflation going forward? Bitcoin price dropped 2%, also as falling inflation boosts U.S. trade war fears. Normally, falling inflation would stimulate the market. That has not necessarily been the case because tariffs are sucking the air out of the market right now. Polymarket has a couple of things. Let me kind of zoom in on this for you guys a little bit so you'll see a little bit here. All right, so this is the likelihood of a rate cut here in March. Pretty much not going to happen. It's going to be 100%. We're not going to see a rate cut this month, which means not a rate increase either. But I think we will see some indicators. So when we do that live stream on March 19th, next week, stick around for that one because I think there will be a big significance to this May 7th date. This is the one that is really up for grabs right now. As you can see here, it's lending and trending to the upside of a rate cut. But June 18th is when it goes absolutely full send to a rate cut. So May and June, big months. Remember May? We've seen May before become a very critical date in past cycles, even though I'm not really all in on the 4-year cycle, but I am in on sell and may go away because that's happened in the Wall Street and the securities markets for quite some time. Another thing I want to get into is this government shutdown because this also has an impact on crypto. And that's why I think we're starting to see Bitcoin starting to edge down. And I think there's two things that happen here, guys. Friday night is the shutdown time. Here's Schumer. He's talking about it. Take a look.
Mr. President,
the Democratic leader.
Funding the government should be a bipartisan effort, but Republicans chose a partisan path, drafting their continuing resolution without any input from congressional Democrats. Because of that, Republicans do not have the votes in the Senate to invoke cloture on the House CR. Our caucus is unified on a clean April 11th CR that will keep the government open and give Congress time to negotiate bipartisan legislation that can pass. We should.
All right, so you can see, do they have any leverage, the Democrats right now, to even threaten? That's Schumer up there. But I want to go to the next clip here because this will give us a little bit more insight. Take a look.
Who came up? Did you come up with Schumer Shutdown? Do you know who came up with that?
I think Chuck Schumer actually came up with Schumer Shutdown almost a month ago. He started talking about he wants to shut down the government to be able to protest the Trump policies and what he's doing. And so, yeah, I think actually Chuck Schumer actually invented the term Schumer Shutdown on it. At the end of the day, we're going to keep this government open.
Could you possibly, in the back of your mind, do you know 8 Democrats that you think are possibly going to go for this, or is it going to be some other route in the end?
Everybody's going to have to make a decision on it right now. There's a couple of options Democrats have, and I get what they're trying to do. They're trying to use the leverage that they have to say we're going to shut down the government if we don't get what we want. I get that. They're trying to use their sole bit of leverage. And in reality, they don't want to hurt federal workers either. They don't want to hurt the economy either. I think there are 8 reasonable Democrats that are going to step up and say, OK, let's keep it open. The other option they have is they could just not filibuster the bill. This bill would pass with 51 votes, and Republicans are ready to be able to pass it as long as Democrats don't filibuster the procedural motions. The procedural motions take 60, final passage take 51. So if Democrats just want to say, we're not going to filibuster it, we could still pass it on our own. So we'll see what actually happens.
And I think that is the key. That's the path to a non-government shutdown, is no filibuster. And I think that's what's going to happen. We're going to lead it right up to the 12th hour, I guess, on Friday night. So expect some volatility in the market until that time. Once it happens, do expect a little bit of a rubber band effect. So we may see a little bit of a trend over the weekend. You look at a couple of things here on the USA Today breakdown. They kind of give it to you a little bit more. This, of course, is where House Reps, this is how it got to where it is right now. And this led out with a 217 to 213. That passed, and that was happening just this last Tuesday. Then you have the Senate, which is sitting here, that's got to approve the bill by basically 12 o'clock tomorrow or Friday night. Then, though the House Speaker, this is Johnson talking about this, he said, we have enough votes in the House, the bipartisan divide in the Senate makes the bill passage uncertain. That's back to that clip right there where they're talking about all of that. So there's still a few things in the loom, but it does look like that. I just don't think that the Democrats will do it. I don't think they'll pull the trigger and shut it down. Now, if they do, on midnight, if we don't get a passage of a government, and we do get a government shutdown and it rolls into the weekend, look for some crazy buying opportunities. So be ready. Friday night, guys, be on your trading tools, because we're going to see some volatility that could go into the wee hours. Now, let's talk about the other side of things, and that is Wall Street. The Magnificent Seven premium relative to the rest of the S&P 500 has now fallen to its lowest level since 2017. This is pre-pandemic level. This is a big deal because it shows that we are seeing a very different Wall Street. And there's two things that can happen here. One, of course, is where we see a liquidity hit that is so hard that could push a lot of calls into selling crypto assets to cover those calls. And then there are other areas of this that it could also push people into more of the risk assets as a flight to safety. So there's a lot of angles on this. Now, Scott Bessent, again, you just saw a clip on him. He talks a little bit more about the stock market. Listen in.
But 62% of Americans own stocks. I mean, it's near 20-year high. So how can the White House not be concerned about hardworking Americans' 401k plans?
Look, Sarah, I didn't say we're not concerned. I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term, and I can't tell you that the market's going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
So this is where you have to watch your P's and Q's, because asset managers right now are holding only 1.4% of their assets in cash. This is their lowest cash allocation in at least 20 years. You look at Warren Buffett, highest cash position. I know some money managers out here that about 2 weeks ago, they exited their tech assets completely and went to more and more cash, a little bit of Bitcoin. This could be the problem right here that is brewing, and that is a massive stock market fall. Now, if that occurs, guys, there is nothing that's going to stop this market from a crater, and that could see Bitcoin moving back into that 72K. We had Tim on the other day on an analysis. That's where Bitcoin could push back down towards 72K. And if it drops below 70K, that is an existential threat to Bitcoin because of the positions of guess who? Strategy and Michael Saylor. A lot of that all could be leveraged right here on this one bar chart, and that is no cash liquidity setting in the market. If it gets sucked out of the market and these positions get flushed, this is a problem for Wall Street, and it's a problem for risk assets as well. Kobayashi talks a lot about this right here, and this President Trump now believes short-term pain is his only option to lower inflation. Listen, if we see another 5% out of the stock market coming off in the next 10 days, woo, the market is going to be very, very, very upset and I think frustrated. And of course, this will push everything to this stalling effect that we've seen and talked about here on the show, is that it's not necessarily stagflation, because I think we will have inflation absolutely cratering. And the longer term situation that's going to play into this is how companies are trying to plan. That's when you throw in tariffs, and now you've got a whole mix of things that are not good, and that could push you into recession. So you can kind of see these are all very negative things. The shutdown is just the beginning of this. The rest of this plays into some of the ways that the market is going to respond. And I think that's what we are facing right now. Trump also is talking about this right here. I mean, this was crazy when I saw this. First, I thought it was a joke. Trump family is now in talks to acquire a stake in Binance. This is going to be Binance US. Now, this is going after CZ is going for a pardon. This is where it gets a little icky. And I know you guys are watching right now and you're thinking, what the F just happened? If Trump's, and this is most likely going to be coming from Donald Trump Jr. and that group, they understand where the vision is. And I think the positive thing is that they know where the money is going to be going, and that is going to be in the crypto markets. Binance could go head to head with Robinhood and also Coinbase. This would be a very intriguing, but also very, very questioned political and business move in the next few years. This could be the biggest one. This also could hurt Trump overall and in the Republican Party. So just be on the lookout for this one. This could get negative really quickly. Last thing I want to hit on is, if you guys remember the government shutdown back in December, very high percentage, and then boom, it did not happen. It boils right up to the point and then it fell off. That's kind of where we are right now here on Thursday morning as we're recording this. I think you're going to see a lot more pain here, guys, so expect to continue to see a little bit of pressure in the markets, and that's where I think you are. But I do think that they will finally get through. A filibuster will help, break that loose. If you look the government shutdown over on Polymarket, zooming in on that right there, it's still a 65% chance, and the chance has spiked a little bit. So the mainstream media doing a good job at spinning this negatively and in pro-democratic fashion to be able to sway some of these sentiment numbers that we're seeing coming in from Polymarket. So I don't know. Let me know what you guys think in the comments. Do you think that's going to be the category of concern is the shutdown? Or are you more worried about this main potential market crash incoming on securities? Let me know in the comments down below. Join the Diamond Circle. And of course, if you're not in our Telegram group, that's the place to be, man. It is where I am every day. I'm chatting with you guys. I love to have conversations with you guys. And of course, if you want to reach me out there on X, it's just @Paul Barron. We'll catch you next time right here on TechPath.